Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top higher. Good God. I can't look at this, guys. Like my strategy is, you buy it and you hope that you gotta get time. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out, and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, I am super late again. What the hell is with me? But hey, let's go straight to the charts here. We got an interesting setup for the week. We got a lot of stuff happening here. We don't have any time to waste. S&P 500, after having a little bit of an increase going into the holiday, flat yesterday during the holiday, and now here this morning, some risk-off sentiment coming into the market across the board. 10-year treasuries spiking up here and flattening, continuing. And we come over to oil. Oil still kind of in the range, I would say. I'm moderating a little bit. Gold and silver pressured down below 1800 at points here as the yields decline. What the heck? So here again, it's like, what? So yields are going down. Gold and silver not okay. But you know what? Apparently a lot of the demand for gold and silver is coming from, China and so forth. And so I think that the gold right now, it might be more about the individual market supply and demand. Man, the treasuries are just popping off wild here. What the heck? All we had was Canadian building permits month-over-month news there, by the way. So that's a little wild action in the treasury already. Copper getting slaughtered. Oh man, copper is just getting hammered. Look at that. Well, don't have my other charts up, so I need so Bitcoin here. Bitcoin still just kind of chilling around the 20,000 level. And then currencies, the dollar, man, I need to get a better dollar chart up here, but the dollar is up at new yearly highs, 105.82, up at 106 at one point. So the dollar just, woo, crazy. I have a little bit of work to do on these workspaces. I'm still kind of sorting them out. All right, we got that over here. Let's come back. Let's see, is there some live news coming on here that I am missing? Nope. The what I'm seeing here in the treasuries is like widespread panic. Hello, Hydro. Hello, Captain Price. Well, I need to do a little bit of work over here. I think that we need, at the very least, well, I don't necessarily need tick replay on, but I do need my delta indicators over on here. So I'll add that. Okay. How low can it go mindset? Well, it could be. I mean, last week we were getting a lot of balancing inflows and so forth. And maybe now without that support, the S&P 500 is just because there was no like real impetus for this shift in risk sentiment, right? Not from what I can, from where I'm sitting, I don't see anything. The treasuries really were just like popping off there, though, right? The problem is like how far back can it go? Oh man. Yeah, I don't see anything other than the Canadian building permits and maybe some dollar movement. Hmm. Okay, well they did come back quite dramatically there, and now they're popping right back up to the highs. Maybe about to push higher. I mean, look, there's a big old order at 120. It's a big order there in the 5-year. Right, have to give me a good price. Spread in the 2-year seems a little crappy. So I think that we will try and bring it in there a little bit. Fine. Hmm. Okay. Well, it looks like we already fixed it. By the way, this light needs to be moved. I have a light. I have it behind me. I don't know. That's good. Kind of helps. It's nice. But it's better right there. The films for 2020, 2021 is going to be called The Greater Recession. I don't know. You know, something that I'm seeing a lot in markets here is just they're pinging back and forth really quickly, right? Like right now, yields are shooting up. What happens if we come in and we get like really bad CPI numbers later this week? Right? Isn't that tomorrow? We really don't have any news today. Man, them treasuries are not. They're not really giving you a good trade. They're not really giving you a good trade, but they are moving. Maybe we'll try and stand in front of him. Let's see here. So Wednesday is FOMC minutes. Oh, so wait, when is the? I thought it was. Oh, maybe it's the week after that. It's the CPI next week. Yeah, CPI is next week. This week is tomorrow. Williams speaking. Final services PMI. Jolt's jobs openings. ISM services. FOMC meeting minutes. Okay. And there they go a little bit higher. They got to that 120 awfully fast. I suppose that in the micros, not I suppose. In the micros, I could have just hit into it and I would have made a little bit, right? It seems like it's being that kind of day at the moment. I feel like a pansy. This is a really strong trend in the 10-year. Like, oh man. I don't know how sustainable that is. Not that I would step in and buy it, but so if I bring this red within 10, then the robot shows up, right? Mark's live tweets cable falls through last week's low as the risk trade continues to deteriorate. Being already middle class to poor to very poor. It sure seems to me like a lot of people blew a lot of money on things that they didn't really need, didn't really know what they were doing, you know? Like some of them just threw it into real estate, which is like, well, I hope you enjoy that house because you're going to have to live there a very, very long time to be profitable on that one. I mean, I spent money during the pandemic, maybe more than I should have. I don't know. But like my thinking at the time was we have inflation. So what I should be doing is I should be spending the money on things that will uh allow me to produce more in the future. Right? So here's the thing. When you're thinking about inflation, okay, right now, like how do you deal with inflation as a regular person? Because it doesn't seems like no matter where you go right now, you're getting creamed, right? Gold's not doing very well. Treasuries are selling. Equities are selling. Cash is like the only safe place, and cash isn't necessarily safe either because again, it's inflation, right? Well, the only thing that really works in these situations, I'm telling you, is you have to become more productive. Is really what it comes down to. Is that's the time to increase your skills and make yourself more efficient. So I think that we made ourselves a lot more efficient here on the YouTube channel. And so I spent it on things like the camera and so forth instead of just hiding it away. There was a little bit that I kept that I could still put into the markets, but generally overall, we spent it developing the channel, right? But I kind of look back now and I'm like, well, should I have done as much? I don't know. It's a hard call. Things could flip really quickly here though, right? The issue that we're seeing again and again is that the market is just getting flung all over the place. So the treasuries have been moving up on recession fears. But again, CPI comes out next week, it's high. Those things are cratering again, right? High volatility, high range. And especially here this morning, and these treasuries are just all over the place. The world went to clown mode fast. Yeah, well, it was really like, it's the social media, and I I, I wouldn't have expected it to be like this, but it seems to me that most people just don't know better, you know? Like it should have been really obvious to everyone that what was going on in the post-pandemic market was not natural and wasn't going to last. But people by and large fell for it, right? It's not like nobody warned them. Well, we're coming back into this 27 area, which appears to be a little bit of a liquidity hole, possibly. So that might give us a little bit of time to catch our breath. And I was watching this the other day because so I don't mean to bash on an individual creator. Okay, I don't watch this guy's channel or anything like that. I am going to talk about somebody specifically though, so it's not like animosity or anything like that. It's just the it's the best example here was like I saw this video yesterday. Um, it wasn't like a YouTube video. It was just like a little GIF that had been posted from Meet Kevin. And apparently Meet Kevin had money invested in one of these DeFi schemes. And it was a lot too. It was a couple 100,000 and 95% loss on it. Like it's just completely gone. It's completely gone. And I remember somebody early on in the pandemic saying, "Oh yeah, you should watch Meet Kevin. I love that channel," and going to it and being like, "I don't understand how this guy is getting so much traffic because his videos just don't kind of fit." Well, anyways, he became popular. And but in this thread, the comments were not the comments were not very flattering to him. And there is definitely something too that he kind of leaned into it more than other people did, right? It was all crypto this and Tesla that and GameStop, like he really leaned into it. And the thing that I find so striking about that whole market is that it was like that was the person that ended up going to the top of the pyramid in the social media hierarchy, at least, right? It's you usually don't want to go for the people that are the most prominent on social media, that are like the most successful, because usually that success is built on how much money they made. And if they've done it through markets, then usually the amount of money that they made was because of taking on excessive risk. So really what you're doing is you're setting yourself up by following such a person, right? And you can just see it. It was like it wasn't a scammer. I don't think that Meet Kevin is a scammer or anything like that. I mean, listen, if let's be really careful about what we're saying with people, right? Because that's when you say something, you make a statement that is untrue, right? I don't think that he's ever done that. Okay, people, they're not trying to like sell you on something that they know is nonsense, right? They make money from referrals. Well, everybody makes money from referrals if they're an influencer. Come on. It's not even that he's really dumb. It's that he is not the experienced person in the space, right? Like really think about it. How did he become the big name? Because when I go and I look at his YouTube, there's nothing in his YouTube that screams to me like, "Oh, the algorithm is going to totally pick this up." And yeah, no. It's not like that at all. I'm pretty certain that almost his entire success comes from the amount of money that he made in real estate. So what happened was he was in a real estate bubble. He was one of the most aggressive, highest risk-taking players in the real estate market. And then he says, okay, I'm going to turn around and I'm going to do that with stocks. So now he's doing that same thing with stocks. Okay. He's not a stock person. He doesn't have years and decades of experience in valuing stocks or in executing or in on following the financial news, anything like that, right? It's just highly speculative pop culture finance, right? And that's why he attracted the following that he did. Like the problem was that anybody that was experienced, anybody that really understands what's going on in the financial markets was telling people this whole thing is stupid. You don't want to, yeah, you make money in the short term, but in the end this is all going to fall apart. And are you going to be able to get out before it does? Probably not. I said it a million times, right? Many people said this. The smart people knew what was going on the whole time, and what happened. Nobody on social media wanted to hear it. If you were the one out there saying that sort of a thing, they just left. You're like, you guys are here. You remember the GameStop thing, right? We had like 1,000 followers on GameStop. And then afterwards, I was like, okay, well, I held it a little bit too long, but it looks like the trade is over. And here's why. Short interest did drop, and they did turn off the buy button. It's kind of a bum deal, but that's what happened. First, the best trade is usually the first one. So now just walk away, right? And what happened? They all disappeared, right? They all went to the other channels that were telling them, hold old diamond hands forever and ever, right? And those people lost some money, right? But it was like, if you didn't play to the crowd, they didn't want to listen. You had to play to the crowd. It was the whole thing is just really jarring that it was that dramatic of a difference. And I don't know, we can blame it on the YouTube algorithm or something, or maybe it's just the way, maybe people are just prone to that, but right? But no, Meet Kevin isn't trying to scam people. Listen, trading is not really as lucrative of a career as everybody thinks it is, right? I'm not gonna, if somebody's popular and they have a product that's worthwhile, they can, of course, right? We have an indicator package that I feel includes a couple of tools that are 100% necessary for the way that I trade, and frankly, I kind of feel like should be built into NinjaTrader. And I'm kind of surprised that there's not, other people didn't make these tools, but it is what it is, right? And I sell that, right? Just because it's how do I say this? I can't guarantee that you're going to make money with those indicators, right? Because it's still up to you. It still comes down to that the market is more statistically efficient than it is informationally efficient. So I can come and give you tools that are 100% necessary, in my opinion, to understand what the market is doing. But you can have all that, and the chances are still that you're more likely to lose money than not. You just maybe have a little bit better of a chance, right? So I'm not going to go and trash on anybody unless they're selling something that's obviously a bad deal, right? Like these people out there that are selling $1,000 indicator packages based on indicators that you can mostly get elsewhere. Mentorship programs that are several thousands of dollars, and you're not really getting anything from them. Like, hey, I'm if I had the time, I would love to mentor. I'd love to have the opportunity to mentor, and I would probably charge people per hour. And it might be a bit. It might be like, between $50 and $100 an hour or something like that, right? I would do that. But there's no way that I would be charging people $10,000. Are you effing kidding me? You effing kidding me? Well, I mean, if somebody wants to be mentored, they should just come and chill in chat, right? And ask questions. Can you mentor my son? But he is a dog. Oh man, I was so mean yesterday because what were they were talking about? How did it come up? I forget how it came up, but the issue of grades came up because my stepson has not been getting good grades. I told him, look, I'm not gonna pay for college tuition for somebody that's getting C's and D's, right? As that's just a bad investment. You're investing money into somebody that is already has a history of poor performance to go to school. Yeah, I'm not going to do that. And you know what? That's I not my problem. I don't particularly care if you want to do poorly in school because I can just redirect those resources to the other kids that are doing well in school, and there are there are some, right? I brought that up. You're bringing up the mentoring sons thing. It's like it's an interesting like here's the ultimate conundrum of life, folks. The big question, and it relates back to what we were just talking about with the markets here, right? Um, you can't you're trying to coerce people into doing things doesn't work very well. You can have a kid that's like going 100% off of the deep end. Seems to me that like the harder, like more authoritarian you get about what they believe, the harder they go the other way. You just can't force people, you know? Being a mentor is an interesting kind of conundrum because even when you got somebody that really wants to learn and everything, yeah, we're all stubborn and we want to do our own things, and it's so incredibly difficult, I've found, to convince people of the real nature of markets, even though it's like very firmly established empirically, and the entire financial industry uses this kind of stuff, and people still want to use technical analysis. It makes zero sense. There's just like there's no way, right? So then when you get into somebody that really is like just doesn't care, what do you do? There's nothing. You can't coerce people. Oh, that's the whole trick in life is how to influence people for good and to make their lives better and to help our whole of society together create a better society for the people in the future, because that's what we've always done since the beginning of time. How do you do it? What's the most effective way to do it? We don't know. There's many ideas, but this is the biggest conundrum. Lately, lately it seems like society has just decided, screw them. We'll just silence the people that are saying the things that we don't like. Oh man, you can't change people. Well, people change all the time. People change all the time. It's just trying to force them into change is hard. I mean, the whole thing is that people change all the time, but like trying to change yourself in a specific direction is very difficult, right? There's all sorts of psychology and stuff behind that kind of wants to keep you where you are. You would charge $50 per hour to somebody? No, no, no. So Sikau, the person that is willing to pay an Instagram guru $5,000, I'm not interested in mentoring that person. I'm straight up. I'm not. That's a person that is unlikely to ever be successful in trading. So I'm sure that we could probably set up some program to catch whales and so forth. I'm not interested in it because the whole thing here is I want to develop a better community. The whole way that this kind of started was I felt like there wasn't anywhere really good to go to learn this stuff and to have like a real community with trading, especially if you were trading treasuries. And then people started watching the YouTube channel just kind of out of luck. And so we turned that into building a community with Discord. We're very successful, right? And how are we able to do that? Because we were focused on building the community successfully and not focused on trying to squeeze as much money as possible out of people, right? What's going to happen is all of these people that were gurus that were making, $10,000 a pop or whatever it was, they're going to disappear. Like, as far as I can tell, Meet Kevin has already peaked. And 5 years from now, well, he might still be relevant 5 years from now, but he's certainly not going to be making as much money as he does now. I don't know. It's a pretty big hit, but he had a lot of money to begin with from real estate again. Scam Nash, I'm not familiar with that. But no, for people that want to learn how the markets really are, and they've already watched all of the videos, and they still feel that like individual attention would be useful to them, I'd be totally down for doing that, and I would be doing it for a fair price. Be doing it for a fair price. I don't really have the time to do that right now, though. Tom Nash, I'm not familiar with them. There's definitely a lot of people out there that I'm not gonna say that they're outright scams, but are pretty. Ugh. Okay, so there is one lady out there, that video that I made. I didn't like straight up say it in the video, but I made a video responding to a Daniel Inskeep video where he reviewed a trading robot service, and I wish I had hard evidence that was just a straight up scam and not her just being incredibly naive. But I personally do believe that she knows better and that she's pushing people down a path that she knows is pointless. For instance, right? And I see a lot of that on TikTok as well. There are a lot of people that they're really there to sell some stupid overpriced course that really provides absolutely nothing to you, right? Like, education can be worth something, right? So like, here again, I'm writing a book. I've done a lot. I mean, so basically all of the scripts that I've done for these videos, those are scripts actually written down, and I'm compiling that all together and expanding upon it and so forth to give you something that's like really truly comprehensive, right? Sell it as an ebook. It'll be an expensive ebook probably, but I'm not going to charge people tens of thousands of dollars for it because I'm not giving you like to be spending that much on education. You better be getting like individual attention, man. Right? You don't spend $5,000 on a textbook. That's stupid. Right? But I guess like the thing that I'm trying to say on that point is like, look, just because somebody has a course or an indicator package or affiliate links or whatever the deal is, okay, doesn't make them a bad person or anything like that. Okay, you're an influencer. Being an influencer is a different thing. Okay, and they've got to make money somehow. And if they're making enough money so that they can live off of it, so that they can spend their time making more content and providing value for you, then good for them. It's just that there are a lot of people that are providing services. Holy shit, oil is taking a nosedive. What the is going on? Whoa. Man, they're just down from 108 to now 106. The market is just going like nuts out here. Anyways, but there are a lot of people that are promoting stuff out there that's not worth what they're charging for it, and they know it. And I'm not going to say that that's a scam, because again, a scam is like when you're making promises or statements that you know are untrue. Okay, that's when it's a scam. But there's a lot of people that aren't really providing you value for your money, and I'm not going to be that person, right? I have the ability to give you more value than you're giving me, right? I think that if you go and you buy my indicator package, it's $100. You're going to get more out of that than the $100 that you put in. I firmly believe that. I wouldn't put it out there if I didn't believe that. I put a lot of work into it to make sure that they were all well tested, really solid indicators. And I haven't really aggressively promoted it because I kind of wanted to use their core supporters as a little bit of a beta testing group to sort out a couple of bugs. I think that we've done that mostly. It might be time to start promoting it a little bit more to the wider Ninja Trader audience. But the problem I have with it right now is that there are parts of the indicator package that really are complicated. Really are truly complex. So I'm kind of struggling with what would be the best way to promote it and to teach people about it and so forth. As long as you say not financial advice, past performance not indicative of future results. Well, yeah, it really bothers me when there are people out there that are saying that they're not giving financial advice and then they give financial advice. Right? But what specifically is financial advice? In my opinion, financial advice is when you make recommendations on specific trades or securities or whatever, right? I really think that there should be more strict laws around that for influencers because it clearly got out of hand, right? You don't want to like make it so strict that you completely destroy the space, right? Like I still think that anybody should be able to come out and give their opinion on a stock and so forth. Is just that the rules about what they can say around such a thing should be much more strict. Yeah. It's not financial advice, but you should buy this stock front. Yeah. See, like if I come out and I say, here is the empirical data that we have about financial markets, right? That's not me giving financial advice. I'm not saying buy this specific stock, right? And you notice I will tell you here's the stock that I like. But here again, I'm not giving financial advice. I'm just saying this is what I'm doing. And I'm not a stock picker or a portfolio manager or anything like that. So take such a, follow such trades at your own risk. That's not financial advice either. But there are a lot of people that were really like all in on actual financial advice, right? And they gave poor financial advice. What's really striking to me, fourth quarter of 2021, I'm over on TikTok yelling at the top of my lungs, interest rates are going to go up. And meanwhile, all the major influencers were still all in on tech and all of these things. I don't know what to tell them. I don't know what else I can do. Well, copper is getting creamed here too, but oil in particular is getting slaughtered. I think that this kind of activity, absent a more serious driver, is incredibly odd. I guess the day after a holiday is the time when such a thing could happen. 2s and 10s on the verge of inversion. Yeah, they're already inverted. If you're doing the on the run, they are already inverted. 2.83 versus 2.855. Reflexivity of markets. Mm-hmm. We went straight up and now we go straight down. Because markets are not informationally efficient, but then on the split side, the just completely random move can have a feedback effect that because people believe it, right? The whole debt system is based on constant growth. Well, what else would it be based on? Okay, so like there's this do we feel like this previous conversation that we were having that we've all had our say on it? Right? I guess it's not to me when I'm talking about that sort of stuff, it's important to me. It's important to me that if I'm providing a product that people are getting value out of it, that they get more value than they put in. That's important to me. I know that not everybody behaves that way. I know that the whole financial space influencer thing is kind of a there's a lot of wrong being done in it, right? So it's a topic that really gets me going, but at the same time, there's only so much I can say about it, right? Other than that, we can talk about specific situations and everything, but so to the continual growth, KU coin going under. Whoa, man! So the whole market is just being exposed in the crypto sphere, huh? Well, I tell you what, the price movement in Bitcoin does not look particularly good this morning, but so far they haven't really the bottom hasn't fallen out yet. But on the subject of infinite growth, a lot of people have this perspective of hold on, this is speaking. The new squawk is talking. So there is an opinion or sentiment going on out there that, hey, growth can't just continue forever and ever. Yes, it can. Yes, it can. Okay. If the human race becomes a multi-planet species, multi-system species, heck, if the human race becomes a multi-galaxy species, okay, you have any idea how much potential there is for growth? And when you're talking about quadrillions of people and the amount of innovation and discoveries that many people will eventually come up with, it's really quite mind-boggling. All right. There's at some point in the future, anything that can be done will be done by humans. They'll figure it out eventually. But even if we just restrict ourselves to this planet, we are nowhere close to fully exploiting all of the resources that this planet has to offer and using them in the most efficient and sustainable way. Is okay, if you come out and you find a more sustainable way to use a resource that increases productivity, that increases growth. Yes, growth can go on forever, and that's what we should do. We should always be striving to make the future better for our children. That means becoming bringing in more growth and becoming more efficient. Can go on forever, yeah. The issue is not that we can't continue to grow forever. The issue is that we need to come to grips with the fact that there are some fundamental inefficiencies in our system, in our financial market, that we have to account for. Because when we don't, then you just get tons of people come and throw their money away in meme stocks, right? Because they think, well, if it's going up, surely there must be a good reason why. Right? This is why it's important that people understand market's not informationally efficient. Because they all think that it is, and they're all making bad decisions based on that assumption. Well, oil now at $1.05 after being at 110 earlier in the overnight session. Well, the dollar over here is kind of all over the place, but do see there is just a lot of movement in the other currencies. So, particularly the British pound just getting slammed and slammed and slammed. The Swiss franc going down. Euro, okay. Harnessing resources on that asteroid or comet or whatever, as they can figure out how to do it. Yeah. The fine spice. It is. Listen, there's this idea that was perpetuated back in the 50s and 60s. The baby boomers, because there was so many people being born, right? Everybody was all concerned about this overpopulation of the planet. You'll run into situations where the population grows faster than our ability to build resources and keep up. And so it's, that doesn't mean that we can't keep growing forever. It just means that there's like a maximal population growth that is kind of like optimal, economically speaking. Okay. But what happened was these baby boomers kind of grew up with this idea in their heads because there was so many babies were born during that time compared to any other time that we had ever seen. All right. They have perpetuated a myth that the population growth is too high and is unsustainable. It is a complete, absolute falsehood. Okay. The reality is that the Earth population over the next 100 years is going to start declining. It has already started to decline in Western nations, and that trend is going to continue through to the rest of the world, including third world nations, and their population growth will be negative as well. And as a result, there will be very significant adverse economic consequences from that. It requires people to run an economy and to run an advanced economy. And there is going to be a point at which we will not have enough people to continue doing some of the things that we do, to have some of the wonderful luxuries and technologies that we have, because there just won't be enough people to do them. So the idea that there are too many people, it's absolute nonsense. There is zero empirical mathematical backing behind it. And the math, the people that are like population growth experts are all telling us, oh, we're not making enough people. It's going to be a problem. Robots. No, the robot revolution will bring a lot of productivity to our society. Yes, you will still have to have a job. Don't fall for this basic universal income nonsense. People will always find something to do, right? But it will probably be the case after the robot revolution. And I don't mean like the robots rising up. I mean like industries being mass automation by generalized robots. Things will just be so efficient you won't need a whole lot of money. This whole thing of like working essentially your whole life to pay for your house, that's gonna go away, man. I don't think that it's gonna happen this generation or next generation, but maybe 3 or 4 generations down the line. That's my grandchildren. You watching this? My grandchildren at some point. Yeah, you lucky. You're gonna be able to just work for a year and pay off your house. And then, you probably won't even have to, maybe you'll have to work once a day to pay for everything that you want to do. It'll be a problem in the future. Like, how do you convince people to work? Because they'll be able to live and be just happy sitting at home on their phones watching TikTok all day. TikTok is still around in 100 years. Not only do we have population decline, but we also have less intelligent, progressive, productive-minded people. Well, I don't know how you quantify that. There are some pieces of evidence I've seen that suggest that our ancestors, due to the demands of the environment on them, were more intelligent than we are. Yeah. But, as we know things that they didn't know, though, so. Are there a lot of people that, well, so here's the thing. This whole thing, so like my stepson, I don't think that my stepson wants to become a lazy person, non-productive member of society at all. That's certainly not the case. But I don't think that he realizes, no man truly does until they've done it, right? What it takes to be a productive member of society, right? It's a difficult thing as a man who has no real inherent value, whose life is basically can just be discarded by the government as far as they're concerned, right? To go out into that world and to build something and produce something of value when you've never done that before. And you know what? A lot of men, they come into the world and they don't make that, right? They are only able to find the bare minimum to be able to live, and they never take it further than that. And yeah, it seems like that's a problem in our society. I hope that my stepson doesn't be, or any of my children for that matter, hope that none of them become like that. But is it more of a problem now than it was back then? I'm not so sure that that's actually true. There was always this, there's kind of always been a criminal element around, and lazy people and so on and so forth. And if anything, I think that we've probably become better in the United States, at least, in creating a system in which people are incentivized to produce, but the whole thing comes back to, like, again, how do you influence people? Right? If we want people to understand that the markets are not informationally efficient and the impact that has on their decision making, how do you convince them of that? We have a small group of people that understand that, but the larger population, by and large, doesn't seem to want to accept it. How do you create a system that maximizes the number of people that become productive? How do you create a system that will build and continue to make people's lives better, to continually increase the standard of living across the world for the next 1,000 years. What are the cultural values and systems and so forth that we should be improving and putting in place to accomplish that from like the long-term perspective, right? Because I will probably have people 1,000 years from now, my descendants still around. Yeah, I would hope so. I got 2 chances now. Right? Two kids with my genes, right? What is it that we're doing today that's going to help them 1,000 years from now? Right? That's a mind-boggling thing to think about. We as humans are not evolutionarily equipped to understand the consequences of our decisions 1,000 years from now. But that's the task that's in front of us. Right? You have this, pyramid of needs and so forth. And you've fulfilled all of your needs. What's there left? Help other people do it, and particularly the people that come after you. But actually saying that's what we want to do and actually accomplishing it are 2 different things. I can understand why a lot of people never go to that point. The majority of people don't think about that sort of a thing. They just never get to that point. But we're there. We have to start thinking about that. Stop crushing small, real businesses. I agree. Regulation is a necessary force in the market, but we have taken some things way too far. Man. So I've been watching Jeremy Clarkson's farm. So this is the Top Gear guy. He had made a series about him making a farm. And then the pandemic hit. Oh, it's so interesting. But like almost every episode is, well, we can't do this because of this government regulation and we have to fill out this paperwork, and it's absolutely crazy. Who would want to run a farm? After watching that, it's like, who would really want to run a farm? It's grueling work. You're hamstrung at every step, and then in the end you are putting on immense amounts of risk, and you don't really make all that much. And yet the majority of farms are run by like one family. So like we can't just like abandon them. Jeremy bought in a very protected area. Well, it seems to me that Jeremy is kind of trying to make a statement there, though, that like the rules in Britain in particular, and it's not just national laws, but local laws, are simply too restrictive for farmers to make money. But I don't know. I still have 3 episodes left, so you could have bought outside the Cotswolds and it wouldn't have been as bad. Is that the case? It's true. That might be true, rather. But there's still doesn't change the fact that like farming is like really incredibly difficult, and that there are as insane amounts of laws and regulations surrounding that activity. Like, okay, if we as a society all of a sudden decided, I don't know, let's just say that some strange space disease or something came down, and the nature of it was as such that it necessitated everybody move over to subsistence farming. That large scale farms didn't make sense anymore, and everybody had to have their own garden, right? We would have to change the laws, man, because it would not work out. It would not work if we were all subsistence farmers in the United States today or in the UK. He could do without, just wouldn't get 60. I don't know. From watching that thing, it seemed to me that one person, well, let's give him a few years, and he gets efficient at it, and we'll see how well he can do. But it seems to me that the scale of his farm is larger than one person. Or rather, well, actually, that's kind of the interesting part about it, is that like it was being maintained by one person, but that one person wasn't fully utilizing the land, right? That's the dream: buy an island and create your own. No, but why? That's not the dream. That's not the dream. What kind of impact can I have on society and my local community and future generations if I just live out in the middle of nowhere and keep to myself the whole time? No, I'm not doing that. I'm going to stay where there's people and where there's a community. And I'm not interested in creating my own state that's just like for me and my family and then disappearing, right? I'm interested in what kind of an impact can I have on this society to try and help it move in the right direction. It's just, I don't know how to do that effectively. Seems to me like it's a difficult subject that doesn't have a clear answer in general, and that it's something that I don't really have very developed skills for yet, and that I'm not naturally adept at. Because I can just see it with like it going through with kids. It's like, oh, I don't know if I did such a good job. I don't know what I was supposed to do otherwise. It's just, I'm not getting the result that I wanted so far. Maybe it all works out in the end. Yeah, well, the premium location does have an effect. I don't think that completely addresses the statement that it seems like they're trying to make, right? Which is that a lot of small businesses really are hamstrung by regulation. It's very difficult to start a small business. Like, you taking on a lot of risk in general. That just the very nature of the enterprise is difficult, and then we're starting to implement regulations and stuff that are just making it harder for them. Yeah. Well, a lot of the issues that he had with his shop and his parking space really came down to more him not planning it out very well, right? Seems to me that he's a little bit ADHD, or at the very least prone to making impulsive, risk-taking decisions all the time, and that's probably why he's had the success that he's had. But you really get the impression that he's just like winging it half of the time, right? And then after they plow headfirst into something, then all of a sudden it's like, well, actually, there's this law and there's this law, and we didn't consider this, this, and this. S&P 500, first 5 minutes or so, very negative. Treasuries not moving all that much since that initial push higher. Yeah, and doing it makes it better for television, of course. Yeah, because there was a number of times where they told him something, and then he went and he did it anyways. And I have to think that he did that because he thought it'd be better for television. Because that so when I watch that show, the other thing that sticks out to me in that show is, how is this guy so incredibly interesting to watch? He is just so good at taking something as dull as running a farm and turning it into one of the most interesting and compelling TV series that I've ever seen. How does he do that? And did that with the car show too. There's just something about how he plans out and tells a story that I wish I could incorporate into my stream. But then at the same time, it's kind of like, well, yeah, but I'm primarily interested in being successful at the trading and building our community. And I feel that the zany antics and drama aren't necessarily conducive to that point, right? I've been a little bit argumentative on TikTok lately. Um, we've got followers from it, but like, yesterday, yesterday somebody left a comment about technical analysis, and I was like, I don't really want to argue with them. Hey, you want to trade technical analysis? Do it. Keep doing it. Keep doing it. We need people to make money off of, right? Like there needs to be a certain amount of noise in the market. So yeah, having other people out there trading technical analysis is good for us. If you don't want to listen, right? But then at the same time, I'm like, but no, like people do need to understand that technical analysis doesn't work. What do you do? The market ear, short gamma, dreaming about the weekend already. This does kind of look like a market that is short gamma, huh? Zozo 30 years in the way. He is a lot older than me. But do you see where I'm kind of at as like, so I still have some good content to come that I really need to get out. I really want to, well, get more stuff out about the bonds. Like when I realize, oh, well, I don't have videos specifically about bonds, and like if somebody's just getting started getting into it, we should probably have that. So I still feel like there's these big holes in my content. I've been kind of focused on TikTok on like current news and stuff, and I've had some success with that, but clearly I'm not there, right? If I want my channel to be in a place where I could live off of it so that I can make even more content for you guys and provide even more value for you guys, which is the larger goal here, right? It seems to me that I'm not there. I mean, maybe if I was spending my whole time doing that full time, maybe I would have some slightly different approaches, and that would kind of work itself out. But at the moment, I think that my content is not to a place where it's interesting enough to the average person that's not actively scalping futures to be interested in it, right? And I don't know what to do to get there. Are they really using TA, or are they watching momentum and price action? I think some people just like having stuff on the screen that is not, well, I think that that's true, but these people do at the very least believe in TA, even if they're not actively using it. But like, listen, just like momentum. So momentum is a thing, but from the stuff that I've watched, it's much more of a thing in like using it in a whole portfolio and trying to pull the momentum out of an individual asset reliably from price information. That doesn't seem to work from all of the research that I've done. Right. It's kind of like a thing where it's like you can take advantage of momentum when it's happening, but like to reliably be on the correct side of momentum in an asset is using a rules based approach. Doesn't seem to seems to be nearly impossible because you just get too many false signals, right? Well, the treasuries are kind of the way that they're trading up here. That seems like they've accepted this new area. I don't know if that means that there's going to be another further push up, but when I'm looking across assets, I just kind of see a little bit of overextension across the board. Like everything's going one way, and I'm just not sure how sustainable that is. Like gold is going down, and man. Yeah, like that's crazy that again we're seeing interest rates go down and gold goes down, but maybe that's because there's just less concern about inflation now. I don't know. Gold just seems to continue to confound me. I saw this thing that was like, oh well, a lot of the demand for gold comes from China, so China being locked down is a big problem, right? Okay, but why is it moving the way that it is today? It's not really in line with its usual correlations at all. Hmm. See here, the ES does appear to be trying to dig out a recovery here. Oil futures extend losses. Brent crude loses $7 a barrel, and U.S. crude down by $6. Now let's come over here. It's only been, man, that whole long diatribe was 10 minutes. Yeah, the dollar. Well, it does seem like that currency flows are having a dramatic impact on the market right now. That's true. And the dollar is really strong, and that does not help gold at all. Hmm. Turkey threatens it can still block Sweden, Finland's entry as NATO protocols of accession signed. Um. Yeah, what do you do about that? Twos and fives inverts for first time since the COVID lockdowns. Um. Futures line is recession fears Trump tariff optimism. Hmm. Well, as far as I can tell, here for our regular session today so far, we are seeing flows come in based on that the rebalancing for end of month is past, the holiday is past. There's not a whole lot this week, but we do got the FOMC meeting minutes tomorrow, and then a whole bunch of stuff Thursday and Friday with jobs numbers. And so it seems to me like the market is maybe just positioning themselves for that, and that we're just seeing passive flows come in after all of those things come in. And there was nothing in my modeling or the research that I'd done that would have told me that that's the sort of flows that we would see today. But the one that I find the most curious is that oil just like completely collapsed after about 7 o'clock for no apparent reason. So the last 45 minutes, oil is just completely fallen apart. I don't see real, uh, any real headlines to drive that move. see here. Nick Timmeros, here's something I missed. When Jay Powell was asked what he was looking at to see if inflation expectations were rising, he answered, "The point is not to see it at all. An interval of much higher prices for longer is raising risks that central banks find unacceptable." And we're just seeing overall dollar strength. So it seems like what we're getting is like risk off and dollar strength, and then that's kind of driving everything else, right? Oh, although the dollar is coming back here now. Treasury's rising to a new high. Is retail and SoftBank just buying? You really think that SoftBank has that strong of an impact? So here's the thing. So there's a lot of really strong currency rebalancing flows at the beginning and end of the week, right? So I'm sure that those banks making those moves has a lot of impact. The treasuries did kind of kiss a new high by they coming back to the other side of the range very quickly. Oh, I missed that. Tesla missed deliveries. What's with that? Could a global recession weigh on gold prices? That would be insane. Well, not insane, but like, man, if gold struggles through the whole pandemic when we're having high inflation, and then it just craters when we have a recession, I don't know what you do with it. Doesn't that just kind of like listen, if you go through, okay, we had the pandemic, and then an incredible bull market, followed by incredible inflation, followed by a period of what it was saying, rebalancing after that extreme monetary stimulus was put in, and now it looks like, at least right now, likely that we go into a recession, and then we have a loosening of monetary conditions again and a recovery. So if we go through all of that, okay, and gold never pops off, then why should you ever have it ever after that? Like if it doesn't do well somewhere along the line during that whole sequence of events, then it's not worth anything. World War III is bearish for gold. I don't know about that one. I think that one of the things that seems bullish for gold is that there are some countries out there seem to be snatching it up. Oh boy, Amber Heard's lawyers have asked a judge to throw out the $10.35 million verdict against her in the defamation case filed by ex-husband Johnny Depp. Woohoo, so that people can keep talking about it, I guess. Okay, so we did see oil kind of maybe find a temporary floor, and we're seeing the S&P 500 make a stronger attempt. Well, we'll see where they end up in the next 30 seconds, but it looks like they may be turning up. Then we might get a pivot low here. But Bitcoin also seems to be moving up a little bit too, and the chart over there looks a lot better. Could be a head fake, but it's just the market conditions are changing a little bit. Treasuries are still kind of in the range and doing stuff where I'm not so sure if I really want to touch them or not. Okay, interesting. So, did you notice how when we got to 750, when the 5-minute bar closed, there was a little bit of wrestling around here? So there's probably with the way that that bar closed, some algorithms may be changing the way they're doing things. In post-trial motions filed Friday, Heard's attorneys called the jury's June 1st award of $10 million in compensatory damages and $5 million in punitive damages to Tepp excessive and indefensible. They asked the judge to set aside the verdict and dismiss Depp's lawsuit on order of a new trial. What? They want to do it all over again? You'd be kidding me. That's crazy. That's crazy. Yeah. U.S. traders returning from the long weekend, and it's got the picture of the guy from Game of Thrones. Winter is coming, and big down candles. Well, there was a little bit of bearish action came into ES, although it may halt there. Dollar still kind of chopping here. 30-year kind of hinting at a reversal here. I don't know about that. Okay, so we've had some pretty strong buying flows come into the treasuries here, but it is kind of giving hints that it wants to flip down the other way, or rather that the buyers can't seem to support the weight of it. I think that I'm not so sure that that's one that I want to take. Like right now, 2.84 in the 10-year to sell seems like a reasonable trade to me if I was going for that uptrend will continue. If I was going for uptrend will continue. And if it is going to continue up, here would be the spot where they will kind of make it look really, really dire, and then it just kind of flips around. But in the current situation, with me not really necessarily even completely understanding why the risk-off tone has been so excessive today, so it's probably better for me to leave it alone, because maybe it really does absolutely just completely reverse. That's well within possibility based on what we know. So I think I should be careful. And I don't necessarily want to sell it on, I don't think I'm going to try and sell it based on we get some sort of a real reversal, because you're just not getting very good risk reward in that situation. We're already at the bottom of the range. And on top of all of that, the conditions in this area, in the treasuries, look pretty choppy in general, between 29 and 120 or so. Sorry, 29 and 000 evens. So I kind of see the trade. I'm going to pass. And probably later I'll come back and be like, well, it looks like that they did do X from that location. Well, look, there was only 2.84 for like a brief moment. Wouldn't have gotten a fill at that individual price. So can't even take that one. Maybe we would go, Phil. Let's just keep an eye on it. Oh, you know what? So I was thinking, hey, there was a comment that I never addressed. Now I remember what it was. Siko's saying China is doing it, but their methods will never fly here in the States. China is an interesting subject because they've seen a lot of success lately. They look destined to become the top dog in the world because they have the largest economy, because they have the most people. But I think we stand the risk as analysts here of really over extrapolating what we're currently seeing. China has a number of headwinds in its future that will be very difficult to deal with, right? They have issues with their population. They have the oldest population, and when those older people start to retire, that's going to be a real problem. They have a massive bubble in real estate. There's a lot. There are a lot of risks in China's future, right? So I think that it is a little bit too early to come in and say anything about China works or doesn't work. Kind of what I'm worried that what might happen is you might see an economic collapse over there, and then all of the other places in the world would be like, oh yeah, a centrally managed economy doesn't work very well. We were dumb. And then all of the people that were kind of trying to move towards that more centrally managed economy over here in the Western world will have a lot of egg on their face. I think that it's really good to have an agency like the Federal Reserve to be able to manage the money supply and everything. Well, we just have to realize that the market, reason we have a market is because no one person has the information to really make all the decisions or be able to analyze it. It's simply impossible. It has to be decentralized. Eventually, that's going to come and bite China in the butt, I think. Whether it's with housing or population decline or something else. It looked like, okay, so we had a green bar. We had one up bar on the 5-minute chart in ES. They have since erased that and pushed to a new low. And the same thing kind of happened over there in the cryptocurrencies. I'm not seeing oil really move. The dollar is rotating between 106 and 106.10. So not a huge move in the dollar, but that is like a reversion and everything. It seems like the treasuries may be reacting to the dollar moves in the dollar. Like, they don't look very well correlated in price, but when the dollar was moving up, I do see kind of like pressures. When the dollar fell here was when we saw the other rise here in ZN. That again might be, I feel like I'm a little behind on the news for some reason. Not sure what we're missing. Whoa. Okay, so yeah, so here's the Core durable goods. Those are mostly in line. Factory orders are up 1.6 versus 0.5. Okay. So I take it that their read of U.S. factory orders month over month could suggest more inflation in the future. S&P 500 taking it poorly. And yields coming up, they're 2.850. So the buy treasuries on it going higher was definitely the wrong trade. But hey, that's why we didn't take one there, isn't it? Not seeing oil move from that. Okay, well, ES's initial read from that was bad, but now they're turning up. Well, my connection reset. That's curious that I can see over here in Ninja Trader when it does it. But it's just like, why? Why did you do it? It just all of a sudden, initialization requests come through. I'm not even sure that there is like a more US May factory orders. April was revised up about 7% month over month. I'm not sure how significant this news is. It definitely moved off of that, but they seem to have retraced that move already. Let's read Zero Hedge's article about this. After decelerating in April and despite plunging manufacturing PMIs, analysts expected U.S. factory orders to reaccelerate from spot 3 month over month to spot 5 month over month in May, and they were right as orders soared 1 spot 6 month over month. Let's get some context for this move in U.S. factory orders. ISM manufacturing new orders is at its lowest since COVID lockdowns, and U.S. factory orders are reportedly at record highs. Which are you going to believe? Oh, okay. ISM, let me read that again. ISM manufacturing new orders is at its lowest since the COVID lockdowns, and U.S. factory orders are reportedly at record highs. So the two reports are diverging. I've never seen this before. Didn't even necessarily even think about that there was two reports reporting factory orders. So what would be the difference between them? This is the Census Bureau's numbers. Whereas the ISM one is released by the ISM, right? Let's see here. If I just do business surveys, I think. No, wait. What would factory orders be under? Hmm. Oh, factory orders, it comes under growth. Hmm. Curious. I'll just show you this chart. So you can see here, U.S. manufacturers, new orders, total SA has followed the ISM numbers pretty closely for years. And now, since let's say the second half of 2021, they have diverged. Curious. While it seems market not quite sure what to make of it, treasuries did have an extreme move initially, but they've come back. S&P 500 sold, then bought, and then sold to new lows. Gold is just getting absolutely pummeled. 17. They're down almost $50 now in gold. What the heck? Gold is just getting destroyed. Silver doing as bad? Let's see here. Gold is down 1.96%. Silver 2.11. So silver is doing worse. Very curious. Well, I think we should just try to relax and see what they end up doing here. See if they really pick a clear direction or not. I'm not so sure. I'm not really seeing any real urgency in this market at the moment. Well, that might just be me coming in. I'm feeling a little sleepy still. Whoa, spot platinum has fallen over 4%? What? Why am I feeling this sleepiness? I'm going to stand here for a little bit. Let's read this article by Yahoo. Housing prices, we're in for a little bit more pain, economist says. The rapid climb in mortgage rates finally paused this week, but elevated borrowing costs continue to stifle price-rattled home buyers. Rates for the popular 30-year fixed home loan slid to 5.7% last week, down from 5.81% the week prior, according to Freddie Mac. Still, rates have climbed 72 basis points within a 3-week period and are nearly 2.5 percentage points higher than at the start of the year. The rapid surge in rates has cut through homebuyer confidence, according to the Mortgage Bankers Association, causing activity for purchase applications to dwindle in recent weeks. Meanwhile, any opportunities to refinance at a lower rate are largely gone as rates inch closer to 6%. According to Aaron Skies, chief economist for Nest Seekers International, homebuyers won't see a reprieve in housing costs anytime soon, as the Fed is expected to continue hiking interest rates to combat inflation. You're in for a little bit more pain, and I do expect that to last throughout the end of the year. Okay, well. Treasuries may be making a second attempt at falling out the bottom. S&P looks like it's making a more convincing recovery this time. That previous bar, it was a green bar. It was an up bar. I shouldn't say green because my bars are blue. It was an up bar, but it was not actually a pivot. They were just off of a pivot. So this one, we still got about a minute and 15 seconds, but pretty likely that this one does end up being a pivot. So we'll see if there's a reaction. And Financial Juice has their fear and greed index at 21, which is extreme fear. I feel sleepy for whatever reason. Let's try resetting it right there. Are we having a problem in the 5-year? It seems like we are. What do you think is with that? Hmm? Okay. Well, a little bit of spreading coming in here. Not entirely sure how to make it, what to make of it. The 5-year yield is dropping. The liquidity in the 5-year looks a little pathetic. Gold drops $40 to the worst levels of the year. Five-year in the VWAP still looks tilted to the downside. Oh, when was that? Volume at 2.850. If I bid there, will they? Okay. Okay. There's another little push. They sure do seem to be strongly suggesting decline here a little bit. Okay. Okay. Well, the liquidity in the 5 years seems to be a little much more stable there now. But I tried to compete a little bit. It seems like, well, are the treasuries making a more consistent move? The 10-year, there I do see some fits of selling by about 5 to 6,000 contracts. Actually, it's more about 10,000 contracts. The other two, not so much, though. And this could just be reversion to the mean. Bonds are tough to read today. I agree. Like they're having these moves quite impulsive. No rhyme or reason. These yields are not very responsive to what's actually going on in the 5-year here. I think a lot of it is me. I just probably haven't been getting to sleep on time well enough because it's the summer and the baby stays up late and everything, and I think I'm getting to sleep a little late. More like 11. Yeah, it was maybe like 30 minutes, an hour later, but I can kind of feel it weighing on me here. Hmm. S&P 500 did make that pivot low. I don't know if that's really leading to a change in the volume, but it looks like it's long here in ES. $22.5. Wait, where did I get that from? 22.5. 25.5. I would just sit here and I'll just go to sleep. You guys can watch me sleep. Pretty light stream today, actually. Maybe people still coming back from the holiday? I don't know. Should we put in the title? Or bald man falls asleep. No. Oil crashes as $2 as recession fears mount. On today's episode of Capitalism, oil drops $2 as fears of a recession mount. Meanwhile, Joe Biden is still completely clueless. You see this tweet? Dude, who runs Joe Biden's Twitter account? It's probably one of those things where it's like, okay, if you're really good for the interns, we'll let you write the tweet. Somebody had the chance to do it. They started because whoever wrote that is completely clueless. Whoever wrote that tweet, Joe Biden, over the weekend about the gas station owners need to stop charging so much for gasoline. It's like, whoa, you have no clue how any of that works, do you? The government makes more money per gallon of gasoline than the gas station owner does. Oh, man. Yep, a little bit of a spike there in the treasuries. 2 or 3 ticks up, not on a whole lot of volume. I'm kind of wondering if the volume's going to change here or not. It's hard to tell in the 10-year because like Octavius is saying, it's a little choppy. Looks like I've been dropping a few frames today. Yeah, let's reset again. Okay. So did you see that? They would keep beating me out until it actually got to the right price, and then the spread came in. Okay. I get you. Well, I don't want that. I don't know if I want to play that game. I mean, I think that would be interesting if I put an order here and somebody filled it, but you're going to give me a 10 tick spread, I can probably work it out. Except for that there's only been one contract traded so far, and it looks like it was a market sell into 2.85, which may have temporarily lost money. He's probably still in. So maybe this guy's making money. You think? Is that you? Is that any of you? Are any of you short 2.850? Here, let's ask Discord. Wait, how the hell? Dude, my brain is not working. I wrote who's whore instead of who's short. How did I get that? Dude, am I having like a brain aneurysm? What the heck? I'm that sleepy? Yapping there's got the chemicals going a little bit. It was like I focused in for a little bit and then nothing was happening. And then just somebody's getting paid there in the 5-year. Uh-huh. You see this? Yeah, come on, but the real price. But the real price. Uh-huh. Not gonna lie, it's kind of fun. Being the axe in the 5-year is kind of fun. Is that a fair way of calling? Can we call me that? I'm the axe in the 5-year. No, probably that robot is. Probably that robot is. Yeah, come on. Be fair. Let's be fair to them. Okay. I kind of wonder over here in the 2-year if that 2.87 is really reasonable. Because that's a pretty dramatic inversion. Two basis points of inversion now. But you're not really seeing the same thing in the 5-year, right? You see, he's sandbagging. That little shit. He's sandbagging, and then I'm like, yeah, you should be down a little bit more. And he's like, okay, fine. Beat you out. Beats me out. Then he gets to the right price. Then he's like, okay, hold it. Nope, we don't want that one. Whoa. That was a little bit too much. That was a little bit too much of a pull. Dude, if I hadn't clicked that, canceled that there, I think somebody might have executed me. Because look at the wait here. I'll pull it up on the Vista chart. Look at that. Okay. See? I brought the spread in. I brought in the spread. And then it turned around, so I canceled my order and opened completely back up. Now it's like maybe we should be market making over here. No? Oh, okay. Okay. You like 283? Maybe that guy that's short here should hit into me. Oh no, wait. He can't buy, can he? Nope. Oh, look. Now you're losing again. What you gonna do, man? That's interesting. Okay, so the market maker is very, very much more interested on playing the short side. I guess the overall trend for the day is up, but like, look, they fell back down there very hard. They fell back down there very, very hard. Does seem to be a little bit more volume up here at this 2.86 area. Doesn't seem quite right to me. I'm kind of tempted to bid 285, but I think that would be too much. Sounds like the kids are up. Okay, so they dropped back down to where they were before that strong spike. Let's see here. When we come across the markets, do we really see maybe not even in the dollar? Maybe in the dollar. Yeah, that could be driven by dollar flows. Let me close that visit chart. We don't need it. We don't need it. You don't need that anymore. Do 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 do. If you know what song that was, we should be better friends. Yeah, they're gonna do it. They're gonna move back across the range again, aren't they? Aren't they? Wait. What's this? That doesn't seem right to me. Well, like what I'm seeing right now kind of suggests that the bid is correct. Okay, that was a little bit of a breakdown. Here's your chance to break even, bro. Oh no, wait, that's not his chance. So he needs to buy it, huh? Never mind. Here's your chance to double down, bro. No? Okay. Too late. Too late. I guess you need to keep it in stocks. I'm gonna just ban him from main chat. Make a special group just for him so he can only post in stocks. Oh, look at it go. Look at it go. So you could hover out here, but I don't think you wanna. Okay, wait, so we come back here. That one's a little out of line, actually. Okay, better. Change in the yields here. It's a flattening. See here, flat. Yeah. Reset. See, we could probably offer at 2865. I'm trying to think here though. We want this guy to buy into us. I could give him something like this. Yeah. That's so. These robots. Listen, if you don't want to hold it, I don't know why I would hold it. I'd much rather bid, right? Like, I don't want this guy to lose like $20, but like, you got no choice, bro. Well, it's not that you don't have no choice. Depends on how much risk you're willing to put on it, right? We can bring it down for you. Yeah, we'll bring it down for you. Uh-huh. Okay, there you go. That's the best you get in -10. You went out. You've noticed that you're better trading intraday than... Well, that's weird. Generally speaking, you'll do better on a swing trade horizon. But there's lots of ways to do it, right? So... That's so... And Treasury's flowing back up. I don't know. What do you think's gonna happen here? We come back. Let's look at the 10-year here. Hey. So here's what we've been doing. Is this going to... maybe they could come up a little bit more and then goodish. Maybe let's say 119.16. Sure. Or is it going to gadoosh? Which one? Could break either side of this range, right? I don't know if it's a psychology thing or if it's just harder to trade intra-week or intra-month, which flies in the face of all the people who say that day trading is harder. Well, okay, like, what is the performance of the system that you have? How many samples do you have? Right? So the advantage for the swing traders is time, right? You can make way more money if you're in the market for a really long time. I can hear the TV in the next room, and she's watching a YouTuber that was my son is watching it. My baby. So the YouTuber that was suggested to us for speech therapy. So she's like, wee 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 wee. I'm sitting over here. Well, this should actually probably be down a little bit. Yep. I thought so. I know what you're up to. Don't play that game with me. Here, let's reset. Seems to be there was a little bit divergence there between the 10 and the 30. You need to trade for years to get a quality sample. Oh, I don't know about that. I have to say, one quarter is just enough to make you think that you know what you're doing. It's not necessarily actually statistically significant. Because of the fat-tailed nature of your daily returns. It's almost always the case. The day trading strategy has a really fat-tailed daily returns. So you get these people that do really, really well for like 2 years. Like, not kidding. I've seen these traders where they do really, really well for 2 years and then they blow it all in one day. Happens all the time. And he's like, oh, well, it was just my psychology. Well, I mean, your psychology did play into it because he could have stopped, right? But it is the reality of your trading strategy. And the way that you trade, it actually kind of sets you up for making that psychological mistake, because basically the way that you've been making the money is you're like always doubling down on it or whatever, you know? Well, like, let's say, David, that you came through and you were getting, your average winner was roughly equal to your average loser, but you were getting a win rate like 55, 70%, right? Then that would perk my ears up, right? Then it'd be like, well, if it was like more than a month, you do that for a quarter, that's kind of like, at least in this current market, he understands what's going on, right? S&P 500 retracing, pointed down, dollar above $100, $6.21. 5-year lag in here. Come on, you know. Maybe our boy at 285 gets an out after all. Well, that should be a change. That should be a change. No. Anything intraday, let's say. I think, oh, that was the same comment. I already read that. Okay, so if I put this one right here. Yeah. Mm-hmm. Swing trading on what? Because I really want to make swing trading work for me, but there's not much help on this, like with a day job. Well, okay, so like when I say swing trading, like the kind of swing trade that I would have liked to have made would be like the first of the year tends to be the most active, and it looks like interest rates are going to rise. So I want to be short rates until it starts to get out of hand. And you probably could have held that all the way up into April or May, right? And that would have been a swing trade. So it could be anywhere from a few days to a few months. But you really want to be catching like the big swings, you know? If you're going to be doing it that way. So the 30-year seems like we're maybe getting a little bit of steepening here. This offer is still a little fishy. Yeah. I'm getting okay at this. Like, nobody's ever going to film me, but I can tell when the robot is off kilter, right? Yeah. Stop pulling that bullshit. I know what the right number should be. I don't know what the real number should be, but I can see that the other ones moved and you didn't, so. Like, look, they're all up except for one by one tick. Okay. Could probably even do another tick there. Sure. Man, I wanted to put out a video today, but my voice was still kind of icky on Friday, Saturday. But people mean daily charts when they swing trade, and they mean month-long holds. No, well, I mean, if it's a good trend, then yeah. But I'm watching like a 30-minute chart. I don't. Okay, let's put it this way: the time frame that you trade should really be more about the specific edge that you're trying to take advantage of, right? So if we were trying to take advantage of, for instance, mean reversion in treasury yield curve, probably would make more sense to hold it for several days, right? Whoa, what? So somebody decided to hit at 2.875. I'm just noticing here. I'm a little confused. I don't know what happened to the market here. Yeah, that doesn't seem right. Somebody like bid it up super hard. And I was like, what the what? Because it should be back more like 2.85, right? This one didn't go, did it? Let's hold them up next to each other. Okay. So see, this one's been flat almost the whole time. Let's change the interval to be the same. 5, interval with 4. Okay. So this one has been actually kind of moving down. Somebody bid it up and they hit him. Anyways, so if the specific edge that we were looking for was mean reversion in treasury yield curve, then you would probably want to be holding for a couple of days, right? If the edge that you're trying to take advantage of is that the Federal Reserve, it looks like it's going to be raising rates for the next year, and the market isn't pricing it in very well, then you're probably going to want to hold that one for a couple of weeks. If the trade that you want to take is that there was a PMI report today and there was maybe some odd positioning before it, and then maybe you want to hold it just for that day. And I tend to be just for that day, right? But there was some trades where I knew what was going on and I really should have swung it, and I would have made a ton of money if I had done that. Dude, the 5-year is so out of whack here. What the heck? I mean, I think I can take it short here, but it's not. Okay, they're not doing that. Huh. Holding it over the weekend is, yeah, well, I wouldn't be holding it over the weekend unless it was like a one micro treasury future, right? Oh, oil is going for another leg. Oil is going for another leg. This guy that sold 50, he knows what's going on. I wish I hadn't been yapping. I might have hit him. I might have even hit him. Because look at that. That shouldn't have happened. I don't know what going on here, but the 5-year The 2-year seem to be selling pretty hard here. So let's come back here. The 2-year. Let's see what happened in the 2-year. Haven't had one out long enough, so. Seems to me, oh, okay, it's there. There are some trades going off in the 2-year, although it looks like they're buying into him. Well, it's about time for me to go. I think I missed my opportunity there, guys, because I could have sold it at 2.875 and easily have made 15 bucks off of that, right? If I had just been paying attention to, like, it went up and I kind of said, well, that seems like that one went up and these ones didn't, but I wasn't watching it as it happened. So because I just didn't really pay attention, I think I missed a good market making opportunity. Okay, what do you got here? Actually, just got my mind blown. TradingView has live data for on the run treasuries, not yields, but actual. No, they do not. Wait, really? What symbol? Are you just talking about the? I don't know if those ones are actually on the run. So you talking about like the indexes? And like when you come in here and you say, I think it's an index, and you say 10-year. Maybe I need to put it on all. US 10-year? You mean like TVC, for instance? And now that one is in yield. 2.827. It's not. I don't know if it gives giving you accurate intraday data. 2.827. We'd have to look at how that one is calculated. It might not be on the run. OTR. Remove the Y. US, instead of US 10Y, just do US 10. Like that. Bada boom. And then it gives you prices. Oh, yeah, you're right. But all sources. Oh, that's weird. Okay, all sources, North America. How do I get it to be bond? Maybe if I come up to here. No, how do we do it? Here, US 10Y. Oh. What's that one? And then TVC New Bank. So when I click on this one, TVC. Does US 10-year TVC. Must include TVC. We need to figure out how that one's, because I don't. Are we sure that's actually on the run? Yeah, US 30. I've kind of always ignored them because I don't think that they were. Well, I guess mostly because I just didn't have it in my charting platform, right? But like, look, they're saying that the yield here in the 10-year is like $10 from where it is. So I would really question if that's really on the run, or what the difference is between that and this index. But it's difficult for me to sort out what this a bond TVC if that's just a it's not the Tennessee Valley Authority Power Bonds. Don't think so. Because when you come in here and you say, what's the source? It says bond. Then when you come down in here into all sources, it's like, okay, where is bond? None. Right? Where does it come from? Doesn't say. Because if you wanted to look at a longer term chart, sure, might be useful. I would really like a number that we could, arbitrage with. Well, it looks like the 5-year came back, but I don't think it is completely. Yeah, okay. Maybe it's okay. Well, guys, I think I'm going to have to just move on and not take a trade, but it would have been nice to have gotten filled on something. We did okay. All right, I'm going to get going. I think title's good. I will see you guys tomorrow. It'll be an interesting day with the FOMC minutes, though I don't know about how good the morning will be. Thursday and Friday is going to be interesting, though. So I'll see you guys then. In the meantime, yeah, stay profitable, or at least don't lose all of it. Okay, thanks.